venture capital is typically when you're selling a proportion of your business to raise money to help that business scale. So it's not like a debt provider where there will be any kind of interest payments. There's not a kind of ongoing need to service it. In its simplest form, you're selling a proportion of your business today to help the business grow and scale. If you get to the point where your business is generating enough cash for dividends, then obviously that dividends will be shared between the founding team and any investors. And ultimately in the future, where there's a liquidity event and the business is sold, then your investors will get a proportion of that equity. There are a couple of different structures that you need to think about. There's different types of preference shares that may or may not come into the structuring, but broadly an equity investment is taking cash today, sharing your business, selling your business in the future. In terms of the types of businesses that raise venture capital, typically there's around a kind of 1 to 5 in 100 ratio of businesses that want to raise VC cash that actually go on to do that. So for 100 businesses that create a pitch deck, create a story, think they've got a compelling reason to go out and raise funding, somewhere, depending on the economic climate of the time, somewhere between 1 and 5 of those will be successful. The rest will not, and they'll typically either go down bootstrapping or they might get grant capital or a loan might be right, but essentially the VC investors that are looking to back these businesses are trying to back companies that can generate ordinarily at least 10 times, if not more, of a return. So they need to be able to see that high growth, high scale opportunity. So in the north of England, if you're looking to raise VC cash, there's various different funds that you can raise from. So in terms of local investors, there's probably kind of 10 or 12-ish. So we've got some really early stage funds and angel syndicates locally, Funded Angels being one of them. We've also got businesses like Solid Bond, GC Angels, Fund My Pitch. They all tend to invest in that very early stage part of the ecosystem. You've then got funders that come in more at the seed stage, so companies that have built a product, shipped a product, and have typically got at least a couple of $100,000 of revenue. So businesses like Patura Ventures, Mercia, Maven, Deepbridge, couple of others, and then you've got your more Series A funds. So for software businesses, if you're doing £1 million plus of annual revenue, that's when you'd probably be talking to the likes of YFM, BGF, Puma Ventures. So quite a full kind of range of businesses locally. One of the things that we're trying to do on Funded is not just get founders in front of investors from the north, but also bringing people up from London and other parts of the ecosystem, because whilst we've got some great funds on our doorstep, ultimately the more we can do to drag that capital out of London and support more businesses regionally, the better.